Over the past few years, SA equities have seen significant foreign outflows and extreme bearish sentiment from the global investment community. Well, since the national election and the formation of the Government of National Unity, some analysts believe that the opportunity in specific local spheres is being heavily underestimated by the market. SABC Markets presenter Nastassia Arendse spoke to John Gilchrist, Chief Investment Officer at PSG Asset Management, about the opportunities in SA stocks.
Towards the sort of Q3 last year, we saw a great opportunity to switch more into SA equities across our funds. We then saw a very, very strong rally into the end of last year, and we used that as an opportunity to trim back, both on the bond side as well as the SA equity side of things. And then when we had the weakness in sort of March and April, with the elections looming, that was then another great opportunity for us to actually upweight, especially on the SA equity side of things.
Talk to me about that. What were some of the factors that were underpinning that move to want to add on, especially given the uncertainty going into those elections?
Yeah, so I mean, what we saw at some point in March and April 2024 was that, we focus very much on a number of factors, including what is actually priced into the shares. And we were looking at a number of SA shares and seeing them basically priced at levels that implied that there would be no economic growth for the foreseeable future, or really, really anemic economic growth. We were obviously cognizant of the SA elections and had to acknowledge that it was a risk event. So on a number of our funds, the SA domiciled funds, we reviewed the risks and the rewards and felt they were skewed in our favor and did upweight at those very, very low levels, those SA Inc. exposures. On some of the more globally orientated funds, we preferred to actually look at SA shares that had their earnings in dollars. We found they were also being discounted. They were also trading incredibly cheap, but that was a great opportunity because they were cheap. But if the elections went well, we felt they would rally. And if the elections went poorly, we felt the currency would weaken and those shares with dollar revenues would actually be protected to a certain extent. So we actually saw those investments as being some of the best globally in terms of the opportunity set.
It's quite interesting, that you brought up the macro aspect of things, because people would generally assume that, you have to find a good economy and that correlates to great investment decisions. And you say here that's not necessarily the case. Take me through that.
Yeah, so the thing that people miss is that a key part of any investment is actually the price that you pay. And the focus tends to be around the growth, the revenue growth, the earnings growth. But if you pay too much for an investment, even a great company can make a poor investment. And a really good example of that would be Microsoft back in the early 2000s at the top of the dot-com bubble. The share price peaked and it took nearly 17 years for the share price to get back to that level that we saw in early 2000. If you have a look at the underlying company though, over that 17-year period, it grew its headline earnings by 740%, which is more than 12% growth in headline earnings per year, every year for 17 years. And so it was clearly a great company, but because the price got too high, it made a poor investment. What we've seen in South Africa is the converse of that. As I referred to, if the price gets too low, if it's assuming zero growth or very, very little growth, if there is a slight bit of growth that comes through, which we believe is quite possible with load shedding, potentially holding things coming towards an end, with the potential for interest rate cuts, and with a slightly less negative sentiment, we could see greater growth. It doesn't need to be huge growth, but just that growth being higher than what is assumed in the share price could lead to a decent rally.
As a chief investment officer, I mean, what does it mean to be diversified in an environment like this?
I think you've got to be frank, and especially say going into SA elections, it is a binary outcome. It's not in our wheelhouse in terms of being able to predict what's going to happen. I think even, as is I guess often the case, even the experts didn't foresee in terms of the extent of the ANC's decline, the role of MK and EFF. These things are incredibly difficult to ascertain. And what you have to do is just make sure that under all scenarios, You're not going to disappoint your clients. You obviously want to generate the biggest performance that you can for your clients, but you also want to make sure if things go against you that you don't lose too much money and you don't disappoint your clients and underperform materially.
Speaking of those clients, I mean, when you're having that interaction, how are they feeling? Are they feeling bullish about certain aspects of the economy or certain sectors?
So certainly the extreme negativity that we've seen for a number of years has, I wouldn't say dissipated, but has certainly taken a step down. As an example, a colleague of mine, our head of fixed income, just did a recent roadshow. And for years, we've been talking about the prospects for SA bonds. And it's fallen on deaf ears, to be honest. The fiscus was looking poor, the growth prospects were looking poor, and people were very, very negative when we spoke to them about that. And that's despite the fact that because of the high yields on our bonds, they've actually been very, very good investments. Now we've seen a strong rally in those bonds, and people can see a scenario where they continue to rally and we deliver strong performance. So it definitely is a lot less negative. I wouldn't go as far as to say there's a strong positivity. I think for reason, people have heard a lot from politicians. They haven't necessarily seen the actions and the tangible differences. And I think most investors and most people out there want to see that tangible difference before they get too optimistic for the outlook.